Hello and welcome to the Chart of the Week, where every Saturday I try to present you as something that is so astounding, a chart that has such visual impact that you have to stop for a second, look at it, analyze it, and wonder, what does this mean for the market or our economy going forward? Now, this week I've got a special one. As you may recall, over the past couple of weeks, we've been looking at things like unemployment rate and initial claims, which have been unbelievable and have really significant implications for our markets going forward. Today I found something a little bit different. We have to take a step back first and understand what is the major driver for our economy. What makes our economy run? It's easy. In America, it's spending. Absolutely spending. Why? Because GDP, which is gross domestic product, it's a measure of our economic strength and growth, is measured 70% by consumer spending. So if that consumer spending starts to wane or slow down, then we have some serious economic issues ahead of us. So let's start with our chart of the week by looking at the retail sales numbers, which came out last week. Now on this chart, you're looking at price data going all the way back into 2000, so really 20 years of retail sales numbers. And you'll notice that over the period of 20 years, we have had some fluctuations, but nothing that's overly dramatic. You see one spike back in 2001 that went above 6%, but that was an anomaly of only 1 month. Of interest here, to put it in perspective, is back in 2008 and 2009, when we were in the Great Recession, you'll notice that retail sales numbers had a period of 5 or 6 blue bars that were down below zero, highlighted by the red box here. Those were getting down below negative 2%, showing a contraction. Well, you might remember those times. Those times seemed to be very, very dismal. Our economy was in a total mess. It was a wreck. But we really didn't have that bad of data on the charts, right? It was only down below negative 2. So let's take a look at what it looks like today. Now, the current number that came out showed a negative 8.7. I think clearly you would just go, boom, there's a huge drop here in those numbers, and this could be a problem going forward. This right here is way out of whack compared to anything that we've seen historically. So let's pull back the curtain on these numbers to find out exactly where this lack of spending is happening. If you've listened to Trader Merlin for the past couple of months, you'll notice that we've been talking about airlines, lodging, entertainment, movie theaters, all that type of stuff as being a super potential target for getting hammered by this. You'll notice that airlines have a negative 104%. You're thinking, how in the heck can you have a negative number with regards to retail sales? By the way, negative 104%. You're over losing everything. Yeah, here's why. Because so many people have set up travel plans for the summer. They've already bought airline tickets. They already have hotel reservations. So not only are they not purchasing anymore, they're actually canceling those reservations, and that's reflected by that chart that you saw there. So it's interesting to see that spending cut happen. You know it's going to target certain industries. Credit card spending down here at the bottom has been declining about negative 24%. Now this is showing you per day, and it's really calculating through Bank of America's internal data services. So this is kind of 1 point data from Bank of America, but obviously Bank of America is pretty darn big. Now, it's not all ugly. There is a silver lining here. And one of the things we have to look for as traders and investors is, where are those opportunities? Where can we find an opportunity in a crashing market that's dropping significantly to be buying something that might be moving up? Of course, if you're a more experienced trader, you'd be looking at shorting the markets and making money when they drop. So where is that silver lining? Well, as we've again been talking about on Trader Merlin, you have it here in online retail companies. Notice those numbers for the past few weeks have been very positive. Online sales have been increasing significantly. This is why you've seen the chart of Amazon just continue to soar, because they are the benefactor here. Same thing with companies like eBay, have been doing very well over the past couple of weeks. Now, it's not all this 1 point data. It's where that money is going or not coming from. What do I mean by that? I mean, who's spending? I thought this might be an interesting one to kind of set the stage for the inequality gap or the income gap we're going to see, where the upper class and the lower class are going to start to get further and further apart because of spending habits. Notice that those that make $75,000 or less for the month of February, they started to drop a little bit in their consumption, and also in March as we go forward 1 month. So they've dropped their consumption slightly. But the wealthy, those making over $125,000 a year, they have come and cut their spending to a grinding halt. Notice those March numbers. They're almost to zero. They realize that they need to lock down their spending and not make, let's just say, unnecessary consumption patterns right now. It's about saving because the future is uncertain. And when the future is uncertain, we should all of a sudden pull back what we're doing and go away from what we want to just down to what we really, really need. Which is interesting when we look at the final chart here. And I know, I call it the chart of the week, but I just had to show you charts of the week for this Saturday's edition. Now, I'll go one more here, which is interesting because we've talked about how this is going to hit retail restaurants significantly and how they might not do very well because of closures. Notice that the numbers here for restaurants versus grocery stores is rather interesting. Grocery stores have seen a huge spike of 32% in the most recent month. All of a sudden, you see restaurants taking a hit of 32%. So here we are going back to the leave it to beaver, staying at home and cooking your own meals. And you can see that that has happened in the past too. Grocery stores took some hits below zero back in 2007, also in 2010. But we haven't seen spikes like this. Not just spikes in the spending patterns, but spikes in retail sales altogether. Now again, I emphasize that the economy is driven by consumer spending. That is a very, very important number. I also want to emphasize this. When we look at the retail sales numbers, it came out at negative 8.7, a really, really low number. That is 1 point data. It's only for the month of March. Now these numbers come out about 2 weeks after the month ends. What will be really interesting is when we get into the month of June to look back and see what the month of May has done, or even getting into May and seeing what the month of April has done. Because really, if you look at March data, which was negative 8.7, we didn't have the full quarantine, the full lockdown. That is going to be impacted and reflected by April's retail sales numbers, which I think are going to look much, much worse, and that in turn could start to bring this market down further. That's your chart of the week, my friends. We'll see you next Saturday. If you'd like to learn more, visit TraderMerlin.com or join us live on our show every day, Monday through Friday at 2 p.m. Pacific on YouTube.